One of the things we talked about right after the FTX collapse was that DeFi really has this interesting ability to set like the rules of the game that you want to like play. You can't have people behind the scenes like making their own rules. Like we're all playing by the exact same rules. If you want to participate in the market, you're like stuck with those rules, and you either use it or you don't. But that's a massive advantage for people who were spooked by FTX, because I think, just having that like fairness, that like consistency, where people can't, abuse the liquidity, I think is just a massive advantage that isn't really tapped into yet.
Hey everyone, welcome to the Edge podcast. I'm DeFi Dad from Fourth Revolution Capital. I'm here with my friend and co-host from 4RC Nomadic. Today's show is a shorter episode we do called Quick Hits, where we spotlight new and trending DeFi projects and teams. Our goal is to produce these in a timely manner when new and interesting opportunities present themselves, so that you might gain some edge on your peers. For example, in this episode, we'll cover the recently launched Synthetix Perps OP program. It's a 20-week incentives program paying $300,000 of OP rewards per week to traders like those on KWENTA. Now, if you listen regularly to the Edge podcast, we've previously covered the rise of gTrade by Gains Network on Arbitrum. And so today, we're excited to review yet another leading decentralized trading platform, this one being on Optimism. But before we do, just a quick word from our sponsors who make the Edge podcast possible.
MANTLE, a DAO-governed ecosystem of decentralized and token-governed technologies powered by MANTLE's native token, MNT. Its flagship product, MANTLE Network, is a high-performance Ethereum Layer 2 network built with modular architecture. At MANTLE, we're passionate about supporting builders and created a milestone-based grants program for promising Web3 projects. Calling for ambitious Web3 entrepreneurs. Visit mantle.xyz/grants and apply for it today.
Whether you're a trader, farmer, analyst, or newbie, you can trade smart with KyberSwap, the OG decentralized exchange and aggregator on 13 chains. Swap at the best rates, farm with real yields, set limit orders, use their proprietary trading and AI tools with the best UX in DeFi, securely and permissionlessly. Get better rates, better opportunities, better alpha, and a better trading experience. Trade smart now at kyberswap.com. gTrade by Gains Network is a decentralized leverage trading platform, allowing users to synthetically trade crypto, forex, stocks, and commodities with up to 1000x leverage. gTrade is live on both Polygon and Arbitrum, with over $30 billion in all-time trading volume and nearly $50 million in vault liquidity. The platform has consistently been among the top earning protocols, with 7-figure monthly revenue and a net deflationary token. gTrade has become an on-chain staple for both traders and yield seekers. Check them out at gains.trade or by searching Gains Network on Twitter. The future of Web3 is bright, but crypto startups, DAOs, and on-chain organizations can't scale without tooling to power world-class financial and payment operations. Introducing Utopia, your all-in-one platform to create, execute, and understand your Gnosis-safe transactions. Execute payroll 10x faster through automated payment plans. Coordinate reimbursements and accounts payable through payment requests. Execute multi-sig transactions faster with your global team through signing links. View, label, and categorize all of your safe transactions in one place. Start managing your on-chain payments today by going to utopialabs.com. To get started with gasless payments, message Utopia's co-founder on Twitter at 0xkaito.
It all started so simply with CryptoKitties and Maker on Ethereum, but quickly became complex with more applications and many chains. Today, everyone agrees, UX issues are the biggest blocker standing in the way of crypto adoption. Introducing Avocado. Multi-chain UX redesigned from the ground up. The first wallet to abstract networks, accounts, and gas. One gas tank to pay transaction fees on all chains. In USDC. And native access to Instadapp's powerful, custom DeFi strategies. Avocado, one wallet to rule all chains.
All right, in just a moment, we'll introduce one of the core contributors of KWENTA. His name is Andrew. As of this recording on May 18th, 2023, KWENTA is doing about 200 million in daily trade volume, with its record trading day being 488 million on March 17th, just 2 months ago. KWENTA offers up to 50x leverage and currently 33 trading pairs, including the most popular cryptos like ETHUSD and Bitcoin, as well as Forex pairs like the Euro and the British Pound, and then of course commodities like gold and silver. So today we're going to do our best to provide details on how traders are getting paid in OP and KWENTA, as well as some detail about the funding rate, which can be used to open up a delta neutral position in certain instances. So let's kick it off. Andrew, welcome to the Edge podcast. How are you doing?
I'm doing great, man. Thanks for having me.
Andrew, why don't we do the usual here and give a little bit of background about, who you are, how did you get into crypto in the first place? I'd also too like to highlight just how long you've been working on KWENTA. It's one of the, I think it's one of the things that really stands out for me. Like, this isn't an overnight success. Like, you've really been working on Synthetix and KWENTA for quite a long time.
So I've been in probably the DeFi space for 4 or 5 years now, like right when sort of DeFi was getting like turned into a term. Originally kind of like in a project that was doing recurring payments in cryptocurrency. Later I was in like a project doing aggregation, and also kind of just working like with various projects to do kind of like product marketing, which is more about like finding fit in the industry and like how we can kind of like build out a path forward from there. And then through all that, at the end of that kind of journey, about maybe 2 to 3 years ago, I started working with Synthetix. And that was like right before it was cool, like right before it was cool. And I definitely learned a lot about kind of the DeFi dynamics at that point, and like really bought into like DAOs as like a potential way to like coordinate. And that was like the most exciting thing for me at the time. And I got thrown at basically how to build out the exchange side of Synthetix, which is how to actually like trade the assets that Synthetix was supporting. And that was Synthetix.exchange at the time. And then we went on a journey of figuring out how to, allow it to stand up as something that can like attract to a broader audience, differentiate from the underlying Synthetix protocol, which is more of like a way for people to develop with liquidity, less so like its own product. So we rebranded Synthetix.exchange into KWENTA, and eventually it made sense to split it out into a completely independent protocol. So we didn't have this like flag in the ground that said KWENTA is the only people that can build here. We wanted to open it up to everyone. And I think that's worked. You can see awesome projects like Polynomial and Decentrex have started building on it, but KWENTA is still sort of leading the charge there. And now it's, completely independent. It has its own token. It even has its own other products that it's starting to experiment with. So yeah, it's become its completely like siloed thing that works really closely with Synthetix, but is independent at this point. It had been there from the start, sort of working with the Synthetix DAO to split it out. But it itself was actually voted into existence by the council. So it's sort of like founded by Synthetix, which is really interesting. It's kind of like one of the few projects I've ever heard do that. So yeah.
I might be able to dig up some old video from like tutorials of what Synthetix.exchange looked like. But man, I just want to give perspective that back in 2019, 2020, it was a point of pride for many of us who were like into Synthetix, just that like we were providing liquidity through SNX staking, and the trading volume was just pathetic at the time. But it was exciting because it was such an early example of like where we were headed, that like a decentralized leverage exchange could eventually like compete with the likes of like the centralized exchanges. But I have to say, somewhere along that journey, even I was like, is this ever really going to happen? Like, this is such a brutal user experience. This goes back before KWENTA was KWENTA. And it's just insane, like how far we've come, because now I can trade full-time on KWENTA, and I would argue that the trading experience, as long as you know how to set up a wallet like Frame or MetaMask or whatever wallet you use, but you got to use like a browser extension like Frame or MetaMask, it is on par with the likes of Bybit and Binance. So anyways, I will try to share some screenshots there, because I think it's really important to like understand like how far we've actually come in this journey.
Yeah, I love that little kind of like history lesson on Synthetix. That was a great story, Andrew. At 4C, I think everybody on the team except for me is like a Synthetix OG. So that was some of that was quite new to me. So appreciate the background. So I guess for those also new to KWENTA, can you briefly describe kind of what the trading platform is and what does, I guess, decentralized leverage perps mean to someone just getting started?
Sure. So KWENTA is a decentralized derivatives trading platform. So it's operated by a DAO. KWENTA's deployments are all done through a decentralized manner. Everything's basically hosted in decentralized infrastructure, sometimes to our demise. And then, this platform is really designed to facilitate the trading of derivatives at DeFi. So meaning that perpetual futures, options, and any other kind of interesting assets that are interesting mechanisms for trading that we think are in demand will probably make their way onto KWENTA. And right now that's Perps. Perps is one of the most popular ways to trade. And Perps is basically a way to get leverage or to, have like a multiplier for the impact of price movement on your trade. And on KWENTA, you can go up to 50x right now on, I think, ETH and other markets, which enables you to have 50x the action up and down. And that's enabled traders to sort of use smaller amounts of capital to have larger upside or downside. But that's the theory behind Perps, and it worked quite well for a lot of traders.
Yeah, and I want to highlight that for those that have traded on centralized exchanges, that leverage on a decentralized leverage trading platform, it's really important here because think of FTX. Think of how much money was deposited there in order for folks to trade. And at the end of the day, obviously, leverage can be a tool to protect yourself from that counterparty risk depositing into, in the case of a centralized exchange, to protect yourself from the likes of someone like an FTX. In this case, though, that leverage I think is really important because there is still real risk in using KWENTA, the usual sort of stuff in DeFi, like a smart contract exploit. So, we still have to be mindful of risks here. It's definitely not risk-free, but leverage is just so important to allowing us to be able to size up those positions.
One of the things we talked about right after the FTX collapse was that DeFi really has this interesting ability to set like the rules of the game that you want to play, and I can't be tampered with. So I think that's one of the most interesting things that's come out of DeFi is that you can't have people behind the scenes making their own rules. There is we're all playing by the exact same rules. If you want to participate in the market, you're stuck with those rules, and you either use it or you don't. But that's a massive advantage for people who were spooked by FTX because it's a totally different game. You can't get that kind of activity going on in DeFi because the smart contracts sort of fix exactly how the liquidity can be used. No one can tamper with it. So even if there's definitely differences between CEX and DeFi, I think just having that fairness, that consistency, where people can't abuse the liquidity, I think is just a massive advantage that isn't really tapped into yet.
Do you think you could try to summarize some of the major differences between KWENTA and, I'll just highlight GMX and gTrade, because I think those are two of the more popular decentralized leverage trading platforms on Arbitrum. KWENTA is on Optimism. So that, I guess that's one difference, but anything else major that you might call out between some of these platforms?
For sure. So the largest difference between us, KWENTA, and GNS or GMX is really that we're working together with Synthetix. And Synthetix is kind of the underlying protocol that manages the liquidity and offers us perps directly. And in the future, Synthetix is planning on evolving into a more versatile platform for really hosting derivatives liquidity. And that's what Synthetix V3 is. So that partnership that we've had with them enables us to really focus on making the best UX UI ever. And then they could focus on offering the best mechanisms for liquidity. And since we both sort of specialized in those two verticals, I think we ended up with the best of both worlds. We have one of the most competitive mechanisms in DeFi for perps trading, while also having a really, I think, performant front end that can rival even some of the top centralized exchanges in terms of usability. And that's really one of the biggest advantages. And that partnership enabled us to just have a lot of smart people focused on solving hard problems, and gave KWENTA a platform to start expanding. So now we have advanced orders, which is something Synthetix doesn't offer, and margin and other features that I think we can keep on building out and making robust. So that partnership, that really collaborative nature, it's the manifestation of that old story about DeFi acting like Legos, where you can kind of piece them together. KWENTA is literally that. You've stuck the graph and Synthetix and whatever Chainlink onto Pyth, and like all these groups together, and even Lyra, an options trading platform, is something that provides options on KWENTA now. So it's really just this combination of all the like network effects of us working with a lot of smart people who are like specializing on different things. And we've connected that all together. And that's really why I think KWENTA has just like become something that can compete with the best of them.
So you touched on kind of that relationship between Synthetix and KWENTA, and just kind of where that liquidity comes from. Can you maybe dive into a little bit more the smart margin account and what that refers to, and how that works on KWENTA?
Yeah, definitely. So the smart margin is interesting because it's kind of a way where you can like host money in a audited smart contract that will then enable you to like instruct that, funds on how it wants to interact with the given protocol. So we see it actually being something that can expand to like interacting with like directly with like Lyra and options, and like a Synthetix and Perps and swaps on like Uniswap or whatever. It'd be sort of this like wallet that you can like do to interact with that. It's in its first version right now, so I think that does have some limited features, but we've enabled it to like have advanced orders, which will create stop losses and limit orders for people who want to open up perp positions but have more structure in their trades, and even protection with stop losses, so you're avoiding getting liquidated. And it's really just a kind of layer on top of these other underlying protocols that offer derivatives that we can like help to facilitate a little bit of that interaction and additional functionality. So it's a very flexible way for us to like inform how to like instruct those funds to behave. And then in the future, there's even a feature we're working on called delegated trading, which will enable you to have like programmability with those funds. So you could instruct the script on how to handle those funds. People could copy trade those scripts, and you could have kind of profit sharing, et cetera, like built into these like smart margins. So it's actually like a really flexible system. Very, very impressed with the Solidity engineers came up with that, because it seems like something that's been needed for a long time. I'm surprised it hasn't existed. So it seems like a good fit for where we live in the whole space.
Andrew, given that KWENTA is, filling these buy and sell orders by drawing upon liquidity from Synthetix, which at the end of the day, I believe is only on Optimism now. You have to correct me is there still liquidity for Synthetix on mainnet?
Yeah, so there is L1 liquidity. It's just that, perps are on L2, so we really source all of our liquidity to Optimism, and it is a better experience. It's like still very fast, still very competitive. So yeah, we mainly operate on top of Optimism. I haven't used L1 too much. So yeah, it's primarily Optimism.
No, me neither. I prefer KWENTA on Optimism as well.
There's definitely an intention to like move to broader chains. We're definitely aware that there's demand and just kind of like a user flow from other chains like Arbitrum and stuff that we're excited about, and we're not ignoring by any means. But there's a bit of a pathway to get there that we're like slowly working towards.
Is there any guarantee or risk when filling that order? I know that I've had a few of my trades, it fails for whatever reason. Can you kind of dumb that down? Like what happens under the hood? Like how much of a guarantee do I have to actually executing my order at the price that I set it at?
Yeah, the majority of times your prices or like your execution is going to be fine. But the reality is there's a lot of like decentralized infrastructure under the hood, and we don't have 100% like execution rate because of just the infrastructure we're using. So a keeper won't trigger or something like that, and we have it to the point where we've made sure that there's mechanisms in place to ensure that everything's going to go through. And even some recent improvements on Synthetix side, like again, a lot of smart people paying attention to these problems. So you have like constant improvements happening. But yeah, long story short, there was kind of like a hard cap on like using the keeper recently. I'm not sure how deep you want to get into this, but basically we've found that decentralized infrastructure can definitely be a little bit inconsistent, and we're working hard to kind of resolve that, and even considering like what we can use from the real world to sort of like add additional reliability to the platform. So it's one of the things we want to focus on, is really just like offering basically 100% execution rate and similar metrics. So yeah, but it's not something I can like guarantee you today by any means. It's decentralized finance. There's definitely some like early day stuff happening. So yeah.
So be sure if your order doesn't fill, you can just go ahead and DM ANDOTLAS on Twitter. He's available 24/7, 365. Yeah. All customer support requests go to him. And if not to him, be sure to complain to Kain Warwick. You can find him on Twitter as well. Meet Stater Labs, a non-custodial multi-chain liquid staking platform. With over 40,000 users across 6 chains, Stater is just about to launch ETHEX, a decentralized liquid staking token on Ethereum. Backed by some of the biggest names in crypto, their multiple audits with top security firms, bug bounties, and real-time monitoring are a testimony to their emphasis on security and safety. With a unique multi-pool architecture and tokenomics, ETHEX empowers stakers everywhere to run a node with as little as 4 ETH and earn 35% more than solo stakers. Sign up for their ETHEX Alpha today and be the first to know about $1 million in staker rewards. Ethereum is fully decentralized, and Liquidity is a shining example of decentralization. Liquidity is a non-upgradable protocol where users can deposit their ETH and take out a loan interest-free. Users get their loans in LUSD, an unstoppable Ethereum native stablecoin that is solely backed by Ether. You can use Liquidity to buy real-world assets or to earn yield across 20-plus places in DeFi. More risk-tolerant users can also use the protocol to lever up on their ETH. With over 750 million worth of ETH locked into Liquidity's unstoppable contracts, get access to real DeFi. DeFi that's immutable, capital efficient, and fully decentralized. Learn more at liquidity.org.
I love it. Yeah, no, just kind of like listening to that response, like, yeah, it is early days for these platforms, but it's crazy at just how much, and you alluded to this earlier, just how much more functionality, transparency there already is. And like, you know, extrapolating where it's going, it's only going to get better. Like there's like instantaneous, like basically proof of reserve attestations that you can look at. Whereas, you know, a lot of these bigger, maybe less transparent centralized exchanges do it every once in a while or every quarter or something. Like, yeah, it's just amazing to see how much the space has grown and what I think it's going to continue to do with obviously being released on L2s. It's awesome to see. But just getting back into KWENTA, if you can kind of tell us a little bit about how stop losses work, take profit orders. Are there any limitations to how tight they can be given some of the constraints of the Optimism L2?
So first of all, there's a big upgrade coming to Optimism called Optimism Bedrock, which should actually make like just KWENTA generally a little bit more performant, reduce execution fees a little bit from the Synthetix side as a byproduct or a sort of symptom of their upgrade. And I think that's happening like within the next 2 weeks. It's been coming for a long time. So that's one key piece that I think should be watching for. So today's state might change, basically, is what I'm trying to get at. But yeah, stop losses are basically just orders you can set up so that if the price hits a certain level that you want it to execute at before liquidation of your perpetual futures position, it'll go ahead and trigger that price for you, so you don't need to be up all night watching price action just in case. And yeah, you sort of cover at that position, close out, and then you're back in your margin where it's safe. Yeah, your only risk there is basically something not executing, which again, it's most of the time you're going to be fine, but it's still decentralized infrastructure, so I can't guarantee anyone like perfect execution right now. So
I want to talk through a few strategies with you, and we need to get a few questions answered because number one, above all else, you know, we can use KWENTA to long or short the different, you know, trading pairs. But aside from that, there's this mechanism called the funding rate. It's a very familiar mechanism that is in all the other perps markets. Can you just first try to dumb that down for us? What is the funding rate? What's the significance of it being positive or negative? And I don't know if you could potentially touch on how it might differ from some of the funding rate design for other perps markets. There's something there I thought that was a little more unique about how KWENTA does it.
yeah, so the main difference between our funding rate and other funding rates is that we're basically trying to fix a skew. So we are trying to create an even market for shorts and longs with collateral set up by Synthetix. So there's this big pool of liquidity. People are taking different positions. So the tighter that, you know, spread can be, that skew can be, it's essentially delta neutral for the underlying liquidity providing those trades. And with our mechanism, yeah, it's definitely taken a bit of iteration, but it's offered very tight spreads. So meaning that like on larger, more traded markets, you're getting pretty fair funding rate charges for like as you hold your position. And just to clarify, basically a funding rate is something that basically continually is charged to the position as you have it open, and yeah, essentially acts as an ongoing fee, so you can like retain the position and keep it open, and that sort of like pays out the liquidity below it to make sure that it's all even, etc. And yeah, you can hold that position open. One of the key differences, I think a lot of funding rates have points, like I think every certain amount of time it'll execute, like that's when you're charged. Whereas like Synthetix's system is ongoing, so it's like a stream. You're constantly getting charged it, which is a little bit more like even, creating stronger efficiency within the market.
Andrew, is there a place on the KWENTA platform where users can go and like look up historical funding rates just to get an idea of like how they fluctuate and change over time?
Not yet, but what we've done is basically prepared a piece of the UI, which is going to be going out next week. Worst case scenario, 2 weeks, but yeah, it's ready. It's probably one of the most demanded features is having like the way, like an ability to go check the funding rate history for a given market. So yeah, I'm very excited for that. I saw some screenshots of it, and hopefully we can leak some with you guys. But it's looking good. I think people will be very happy with it. So yeah, excited for that.
DeFiLlama has this long short strats tab. It's under the yields tab, and I actually tend to use that to look up. So you do have to search by token. So let's just say I'm interested in the ETH funding rate. It's there on KWENTA, but again, like you got to do a little bit of math just to annualize that or to think about it. And so my point is if you were looking to open a delta neutral position and get paid by the funding rate, let's assume the funding rate is positive so that longs are ultimately paying shorts. And in that instance, I could potentially then open up a short position on, let's say, the KWENTA ETH pair. I'm going to go spot long outside of that just to, so in order for it to be a delta neutral position.
The reality is we have a subgraph. All this information is out there. It's definitely attainable. And we even have an SDK where you can like start to interact more directly with KWENTA and like open trades, etc. But I think the funding rate page coming is probably going to be your like easiest way to sort of like analyze the different rates. But for now, yeah, it's still, relatively new. So I don't think there's like a super convenient tool to go and analyze that data unless there's one that I don't know about. But yeah.
So let's talk about like the most important source for yield. There is a Synthetix OP rewards program that was launched in April. Could you just give some of the key details around that? Like how long does it last? So when would it potentially end? And what are some of the weekly rewards that are being distributed through Synthetix, as well as what KWENTA is putting up for traders as a reward?
Yeah, so there's a 20-week program going on right now. And I think we're into week 3, if I'm not wrong, of these rewards where basically if you're trading perps, the fees that you accumulate during a given week are added to a sort of like pool, and the proportion of fees that you contributed to this pool gets distributed OP rewards. But in addition to that, KWENTA also has its own OP rewards. So I believe Synthetix has around 300,000 that they dedicated to this program. And KWENTA, I believe, has 90,000 or something. I have to double check on top of that. So we actually have additional rewards for people who are trading specifically on KWENTA.
I'm looking actually at a chart that was kindly provided in a mirror post, 300,000 OP rewards, as Andrew noted. And then there's an additional, I think it's 30,000 OP that's being currently put up by KWENTA. And then there's also KWENTA rewards as well. Totally separate token, the KWENTA token.
Yep. And KWENTA has like a permanent rewards program where if you're trading and staking, you basically get access to KWENTA token rewards through each week. And then basically, yeah, the amount of fees that you've accumulated on KWENTA dictates what proportion of those like rewards you're going to get. And it's a permanent program, like it's built into the inflation mechanism. So it's like always going to be there. And it's a great way for people to like who are actually using the platform to become like a part of the ecosystem in the DAO and capture some of the, DAO components. So yeah.
Andrew, I noticed on the KWENTA Grants Council, which is a Twitter account, there was a reference to something called an aggregation terminal. It looks like we're comparing opening positions on like something like KWENTA versus something like GMX. Any other detail you can provide about that?
Yeah, so there's community initiative to analyze the difference between the Synthetix Perps program on KWENTA as well as what GMX is offering. And this compares basically like what opening a position on a given market would look like. And in its infancy, I think it's very focused on just like the Ethereum market compared to GMX and Synthetix. So this will kind of enable people to analyze like what's the difference between the two protocols. And yeah, we're hoping to see that we're consistently beating other protocols. Right now, just focused on like GMX, and like even if like it's really just data at this point for us to understand like what the differences are and when it's favorable to open a position on a given platform. But yeah, that's the idea, is really to inform traders like what the opportunity is on each given protocol.
Hey, Andrew, one thing I was thinking of is how does the KWENTA token work within the KWENTA exchange, and like what utility does it provide? Like why should someone hold the KWENTA token if they like using the exchange?
Right. So there's two core functions of the KWENTA token. One is your like DAO participation, so governance, so being able to vote and like decision making. KWENTA is currently council centric, so you're basically voting about twice a year on these like epochs where you vote in a council, so you're voting for one candidate. And then the second function is rewards mechanism, so making sure that like the value capture that's happening within the DAO does come back to the token holders. And that's currently just inflationary rewards, so ensuring that anytime KWENTA's trading awards, etc., are like going through the system, like it's going back to people who are staking. And there's some incentives even for people who aren't staking, just to like kind of like get them into the DAO. But what happens is when you stake, you are eligible for like a tier of rewards that's more material, and you're able to capture that, and that's in the form of KWENTA. So yeah, it's really a bit of both, and then the infrastructure is well set up for us to capture any kind of value accrual that happens in the future. So it's really just kind of like sitting there as like an opportunity for future votes to go through, et cetera, all the governance process that needs to happen for these decisions to be made. But it's in a good place for additional development on top of it right now. So yeah.
Is the staking APY only based on inflation of the token, or is there currently, when you stake, is there like any sort of like buyback, burn, whatever sort of thing going on there?
Yeah, so there's no value capture happening right now with the token, but I think all the infrastructure is there. I think the community really wants value capture, and we're starting to experiment with like native perps, additional functionality, which will give the opportunity for the DAO to decide whether it wants to add in value accrual for stakers. And then there's additional mechanisms in place that are a little more complicated, like the fee for vesting early. So any inflationary rewards and any rewards you get in general for trading, et cetera, on KWENTA are locked for 1 year. However, there's a 90% penalty if you vest day one. And that means that you can get 10% of those rewards immediately, but if you wait the full year, you'll get 100% of those rewards. And those can even be staked, so it can build on top of your staking stack. It's very flexible. People can exit at any time. And anytime that penalty is exercised, it goes back to the treasury and kind of like can be used for future use. However, a community member recently proposed that half of that's going to go back to stakers and half of that's going to go into treasury. So even knowing it's not implemented yet, that's actually already being tracked, and it's going to be implemented. So there's going to be additional upside, variable upside for people who vested early and stakers to get that kind of reward as well.
Yeah, it seems to mirror a part of what I loved about the SNX staking, that we're vesting those rewards over a year, but it's not like it's just locked up vesting. If you're willing to continue to stake that or stake more of it, you can earn that much more yield. So
Andrew, do you have any other alpha you'd be able to share our listeners on anything coming up for KWENTA?
Yeah, so I have a lot of alpha. The next stages for KWENTA are kind of like a big step forward. We've been sort of like a front end on top of Synthetix, but we're looking to really become something that can like compete with centralized exchange on a broader strategy. So Synthetix will always be like an integral part of KWENTA, just to be completely clear. But we've also started to experiment with additional functionality as well as even native offerings. So in the next epoch or the next 6 months, we're going to be looking to advance our own experimentation with perps, as well as additional functionality built on top of perps. So being able to have like programmable trading like you can interact with, as well as copy trading. And that's all coming within about the next six months. We have kind of a new DAO model that I've been experimenting with as well. I think I have enough information now based on like what's been working for Uni, what's been working for Synthetix, to kind of come up with more of like a hybrid model that can like work really well. So there's I think some like progress just in terms of like what a DAO is, and that's the stuff that I'm really passionate about. So that I'm excited as well to start designing and like implementing with the KWENTA team. And yeah, I think in general, we're about to have an election where the next council for KWENTA is going to come in. This is 5 people voted in by the community who are staking KWENTA to actually vote on proposals that are going through the DAO. And this will be a kind of opportunity for us to update like what is coming up in the roadmap, when that's going to happen, as well as any other key updates like in terms of progress and stuff that's happening. So you can expect in the next week or two a sort of update on how KWENTA has been performing, where we're going next, and any other context you want to know about KWENTA. So keep your eye out for that, as well as kind of open positions and other opportunities to join the DAO. So quite a bit happening in the next 2 weeks.
All right. Well, I think this is probably a good place for us to wrap. I want to remind listeners then that they should check out KWENTA at kwenta.eth.limo. That's the website that I normally use. There's a few different websites actually, but that's the one I use because it uses decentralized infrastructure. And then also remind folks to follow KWENTA on Twitter, which is KWENTA_IO. There are going to be lots of perps protocols that are going to launch in this next like crypto bull cycle whenever that hits. Please be careful, because just because a protocol launches or claims to want to build the next great perps protocol doesn't mean they're going to succeed at it. And one of the things that that I look to is teams that have been in the space a long time and continue to build. And there's really like no team that's been in the space, especially the DeFi space, any longer than someone like Synthetix. And this is a team that, originally derives from the Synthetix team, was incubated in Synthetix, and thankfully has spun out now to work full-time on perps. So I would keep your eye on this. And if you're looking to, again, learn about one of the leading DeFi perps markets, this is it. Check out KWENTA. Thanks everyone for tuning in. If you're a talented builder like Andrew, please consider reaching out to our team at fourthrevolution.capital. And for future episodes of the Edge podcast, please check out our link tree at edge_pod.